What's up everybody, Michael Silva here to do some technical analysis on the S&P 500. We are looking at the SPX, which is the S&P 500 index. We're going to look at the daily time frame and the 30-minute time frame. I'm going to keep this video really quick, short, and to the point. I would like to be going over some more stuff that has been taking place in the markets, but I am out here on a trip. So I'm going to get more in depth when I'm back in Sacramento to talk more about the overall view on the stock market. Let's get into it. All right, so we are here looking at the daily time frame. This green rectangle box down here is an area of support. We call that the bull's camp. The red rectangle is an area of resistance that is known as the bear's camp. The market today has fallen through that rising wedge pattern, so we're going to see if there's going to be a continuation to the downside on this pullback. Now, we kind of been talking about this window right here. We think that the window needs to be closed. However, the last couple of days of trading has been quite volatile. Today, if we zoom in right now on this price action, what you can see taking place is the bears are trying to push the bulls back outside of the camp, but the bulls currently have been pushed back up. They're right there at the edge. Now, the stock market is still active right now. It is 12:45, so we have another 15 minutes left in the market. I'm going to keep these rising wedge patterns up just in case if it does continue to start to break. The main level that I'll be looking for here is 3,200, where I might put on a good risk versus reward trade. If it breaks below the 3,200, that's when I think it's going to be coming down to more that 3,100 range. If I throw on the 50 period moving average and the 200, we talked about that golden cross previously. Now the 50 period moving average is continuing to slope up and up as the days go by, especially when the price action is this far above it. I do believe that if we get a pullback to the 50 period moving average, that is going to act as a significant area of support as well. This market still remains to be the buy the dip, sell the rip type of mentality until further notice. As far as when I might consider selling into the market or dumping equities, that would be more towards the 3,000 range if we get a close below that. But as I see it, we still have quite some time to go. Let's hop into the 30-minute time frame to look over yesterday's support and resistance levels and make adjustments as necessary. All right, so we are here on the 30-minute time frame. This blue vertical line right here represents where the day started. I'm gonna go ahead and remove it. Now, yesterday when we talked about on the 30-minute time frame, we were talking about a potential move more to the upside to close the window. And what happened today on the 23rd? Well, we did not get that gap and go sort of thing that we mentioned. We opened up just a little bit below, so a little bit of a gap down, and it came to push up into that area of resistance, but the resistance at 32.76 held for multiple different data points. So as you can see, we came up just a little bit above it, but we didn't quite get the close above it. Came back down. It acted as support here at that 32.65 level, came back up to hit it a couple of times, and then ultimately got rejected. Now, the price action is still live. Like I said, we still have about 10 more minutes into the trading day. This 32.53 level held for a very short period of time as support, and once that got flushed, notice the big price movement to the downside where the price is currently at. Now, this area right here is the entrance into the bear's camp, and it looks to me like it's kind of forming a bear flag taking place. So we have lower highs being put in, but we have some long upper wicks, which this might be representing some sort of base that it's forming. This could be a pullback to move potentially higher, or if we get a crack below this 32, 33, I think that next level that we're going to be testing is 3,200. So let's go ahead and make the adjustments to our support and resistance areas. As I see it, I'm going to go ahead and clean up the chart just a little bit. So this 32.76 and 32.75, those are still areas of resistance, but just for cleaning up purposes, I'm going to remove the one from the middle and the top, and I'm going to go ahead and make this one the new area of resistance to keep an eye on for tomorrow. And as far as the current price action goes, this area, the bear's camp, is now going to be converted into an area of resistance because the price action is below it. So now we're going to go ahead and look at the areas of support. The areas of support that I want to keep an eye on is 3,200. We're going to make that green. And then the next area is going to be 32.22. Now, the reason for this 32.22 is because that's where the price action pulled down to, and you saw that kind of bounce from right here. And then if you go to the history of the chart, it looks like it acted as resistance previously within this area. Now, the price, like I said, it is still live and still active, and this candle looks like it's getting beat up a little bit. So we might have a close below that, which would indicate, hey, tomorrow we'll probably see a touch around 3,200 if it closes below that. Otherwise, this is going to hold as the support area. So these are the 4 key levels that I'm going to be keeping an eye on going into tomorrow. Now, when I do get back to Sacramento, I'm going to bring back up the 10-year chart, and we're going to get more into detail about other aspects of the market and the overall market. I'm going to talk about gold's breakout, silver's breakout, the US dollar, and the 10-year bond. But till then, this is all I got for you. I will see you on the next technical analysis update for the S&P 500. So see you later.